Hello, I am Rolanda S. McDuffie, CPA. I have a full-service CPA firm in Tampa, Florida, in which I assist business owners in growing and getting financially fit through the areas of accounting, tax, business advisory services, and financial planning. Experts have been predicting that we would crawl out of this pandemic right into a recession. Unfortunately, they were right. And to make matters worse, the supposedly decline in cases now looks like it's trying to make a comeback. Now that means businesses will have to survive a recession while a resurging virus is appearing at the same time. Now look, I don't want you to think your situation is hopeless because it's far from it. With the right planning and action, you can recession-proof your small business, but you need to act quickly. The time to recession-proof your business is right now. Once the economy starts to downturn, it may be too late to make the changes that your business needs to survive and maybe even thrive as the economy worsens. While the recession is already upon us, it is not too late for you to protect your business. Most companies will be affected by the recession in one way or another, but it's up to you to determine how hard your business will be hit. Plus, there's even a chance that you might come out ahead once all of this has passed. It all depends on what you do now to pandemic/recession-proof your business. Now, let's get into the smart money moves that we're going to make with our business. Now, the first smart money move we're going to make is we're going to maintain or increase our marketing spend. Yes, you heard me right. I said maintain or increase the amount of money that we're spending on marketing. And this is because history has shown us again and again and again that those businesses that continue to spend money on marketing during a recession are the ones that reap the benefit. When sales begin to decline, many of your competitors will begin to panic and slash their marketing budgets to save money. This is your opportunity to seize a more significant piece of the market share. As your competition falls, so will the prices. So this means that you can reach far more people for less money. If you begin to see an initial decline in sales, don't follow your natural inclination and jump ship. Hold steady and ride out the wave. So during this time, you should still budget funds for marketing and the cost to create an online presence. Smart money move number 2. Know your numbers and have a financial plan. There are too many businesses operating without a financial plan. And without a plan, where are you going to go? Who knows? The first step in knowing our numbers and creating a financial plan is to create a budget. Now, I know for most of us, that is almost like a 4-letter word. We don't want to hear it. But your budget is the key part of any financial plan. Your budget will make it clear about how much you need to invest in your business. It also allows you to estimate your monthly income and expenses. The second thing that you want to do is keep track of all of your revenues and expenses, preferably using an accounting software, but at the very least using some sort of spreadsheet. By keeping good records, you can quickly take a monthly, quarterly, or yearly snapshot of your business. Now, there are 2 very important financial statements that you should always be taking a look at, and that is your income statement and your balance sheet. The income statement, also known as the profit and loss statement, shows any revenue and expenses earned during the current period. It also shows whether or not you had profit or loss during that period as well. If you're using accounting software, the software can create this report for you as long as you kept good records. Your balance sheet statement has a listing of all the assets, liabilities, and equity of the business. Now, your assets are going to be anything that the business owns. That includes cash. Your liabilities is going to be any debt that the business owes. That includes whoever you need to pay. And then the equity section is going to be the investment within the business, either by yourself or other shareholders or partners in the organization, and any leftover value, meaning profit or loss, that the business holds will be shown in the equity section as well. As with the income statement, your accounting software can create the balance sheet for you as well. Again, track your balance sheet over time to watch your business grow. You should also do a comparative analysis of your P&L statement to track month over month or quarter over quarter or year over year, so you can see how your company is growing or not growing to determine whether or not you need to make changes within your business. Now, let me encourage you, don't just run a balance sheet and a profit and loss statement monthly for the sake of just having the reports available. You want to make sure that you truly understand how to read these reports and understand what they're telling you. Now, you don't have to be an accountant or have gone to school to understand how to read them. But what you do need is a trusted advisor such as myself that will sit down and walk you through how to read your financial statements so you know exactly what they're telling you and what changes that you need to make into your business. Now we're going to move on to smart money tip number 3, protecting your cash flow. As we know, recessions lead to slimmer profit margins, which can make maintaining a healthy cash flow very tricky. So let's get uncomfortably real for a minute. If you don't have a firm grip on your numbers, you won't know how best to protect yourself. So, to survive a pandemic or a recession, it's essential to plan ahead for ways to cushion your cash flow. Knowing every little detail about the money you have on hand and what you're spending it on will make you very aware of where you stand financially. The more you know, the better prepared you are, and the quicker you can make and reevaluate your spending to save money. A lot of small businesses usually do not have large cash or credit resources to deal with slow cash flow. Therefore, it's imperative that small business owners be prepared for issues with collecting money and cash flow. When you get a big payout, don't spend it all. Figure out how to budget what you get for the months you may get little or nothing at all. One way to protect your cash flow is to try to renegotiate the terms with your vendors. Remember, your vendors may be struggling to get by just like you. They'd probably be more happy to renegotiate the terms of your agreement than to lose your business entirely. See if your vendors will be willing to give you more of a competitive price, or maybe be more flexible with the payment terms while the economy is rough. You may also be able to negotiate a discount for cash or early payments. I mean, you never know unless you ask, right? And in talking about protecting our cash flow, we cannot forget about our customers and our clients, especially if we extend credit to them. We want to make sure that the businesses and individuals that we're extending credit are credit worthy to ensure that we're getting paid for our services and our products. In addition, if you're billing your customers and clients, you want to make sure that they're set up on an automated billing system so that your invoices are going out in a timely manner. You also want to make sure that you're following up with those customers or clients that have outstanding balances immediately so that you're not allowing those outstanding balances to continue for an extended period of time. Smart money move number 4. Let's cut out the non-essential expenses. Now is not the time for any significant company retreats, any expensive product launches, or any purchase of expensive assets unless your business really needs them. You want to boost your cash flow by eliminating any non-essential expenses from your budget. You might have noticed that you're wasting money on unused storage rental space. Or you may find out that stocking excess inventory is eating into your profits. You want to take a look at all your costs, both big and small, and then take a thoughtful approach to the ones that you can cut and you can keep. For example, are there any services, memberships, or resources that your business can function without for a while? If so, maybe you should try to live without them. Funnel that money back into the necessary spending for your business. And remember, marketing is necessary. You should also look for cheaper prices for the items that are still listed on your list of necessary items. Our next smart money move is to get financing as soon as possible. Even if you don't need financing at the moment, now is the time to start applying. Due to the recent pandemic, there is still grant money available here locally in the Tampa Bay area. But the reason why I said get financing now is because lenders will typically tighten their lending standards during a recession to make sure that only businesses with the best credit qualify. But regardless, the best financing options take time to secure, so it's best to go ahead and get ahead of the game right now. You should begin by getting a business credit card. If you've been relying on your personal credit card to finance your business, now is the time to get a business credit card. A business credit card not only expands your business working capital, but it can also begin to build your credit history so that you qualify for bigger, better loans down the road. If you haven't already taken advantage of the SBA's Economic Injury Disaster Loan, you may want to consider that now, especially since they have large loans amounts, flexible use cases, low interest rates, and great repayment terms. If you need extra funds for a significant investment or just to boost your cash flow, there are not very many better options available at this time. In addition, a business line of credit is a great safety net to keep in your back pocket. It's additional capital that you can use to expand your cash flow or to tackle an emergency, but you're also under no obligation to use it. So there's no reason not to go ahead and secure one right now. Timely financial assistance for small businesses could mean the difference between survival and going under. Smart money move number 6. Set up a savings safety net. Now this should include both an emergency fund and a regular business savings account for both your long-term and short-term goals. So for example, yesterday, my computer completely died on me. Now this is the second computer in the last 2 weeks. In addition to that, my printer head on my printer actually broke as well. What are the odds of that? So I had to go into my emergency fund so that I can replace both my computer and my printer that broke down in the same day. How fun is that? But the fact that I had emergency funds set aside just made that experience a little bit easier. Now, during this pandemic, we got the opportunity to see firsthand up close why it is important for us to have a 3 to 6 month savings, especially if you have to close down the doors of your business. Now, that saving not only needs to cover 3 to 6 months of your business expenses, but it also needs to cover 3 to 6 months of your personal expenses as well. So it's important to create not only a business budget, but also a personal budget separately so that you know what the amount in profits that you would need to earn in order to cover both your business and your personal expenses. Smart money move number 7, saving for retirement. Once you establish a savings plan, it's important to focus on investing for retirement. Being a business owner, it gives you a certain measure of freedom, but it doesn't give you an excuse to skip out on your savings for retirement. In fact, it makes putting money away that much more crucial. Unlike an employee who might have access to a 401k, you're on your own. And if you have employees, you may feel responsible for helping them to plan for their successful retirement as well. Your first step is going to figure out how much money you need to save for retirement. The amount that you plan to save each year will help you determine the best retirement account for you. Your second step is going to be to decide where to put that money. The good news is that flying solo gives you a lot of options. There are 5 self-employed retirement plans that may work for you. It includes the traditional or the Roth IRA. You have a solo 401k option. You have a SEP IRA. You also have a simple IRA option. And then you have a defined benefits plan as well. For each of these 5 options, there are different contribution limits, tax advantages, and employee requirements or limitations on each plan available. So it's important that you speak with a trusted advisor to find out which plan is going to be right for you and your business. Smart money move number 8, setting up a trust and estate planning. Now, there are several reasons for creating a trust. They can include protecting your assets, providing for minors or beneficiaries who cannot handle funds, saving on estate taxes, anticipating a contested will, elder law planning, and avoiding probate proceedings if real estate is located in multiple jurisdictions. Now, without a doubt, estate planning is best done with the help of a team of professionals working together. Some of the key players for an estate planning team include attorneys, investment advisors, insurance agents, and CPAs. As a CPA, I bring knowledge of taxes to the table to ensure that you create the proper estate plan when creating a trust. As a CPA, I will be able to tell you the tax implications of every decision that you make. This will help you to ensure that your estate plan minimizes the taxes and maximizes the portion of your estate that will be passed down to your beneficiaries. With the incredible high rates of taxation and inflation, it is now more important than ever to have a CPA by your side to make preserving your estate as simple as possible. You'll need sound estate planning to preserve the estate and wealth you're working so hard to attain. In addition, you'll need a CPA to maintain the financial records of the trust, account for the trust assets, review the trust documents for tax consequences, prepare tax returns, and audit the financial statements for the trust if necessary. Now, the last smart money move that I'm going to share is smart money move number 9, and that is to hire a CPA. Many business owners only consider hiring a CPA to get their taxes completed at year end. They often don't realize or forget that tax planning, which is a separate engagement, is just as important as tax preparation services. You should be working with your CPA throughout the year to get your taxes lowered. By the time you go to get your taxes filed at year end, it's too late to help you lower your taxes for that particular tax year. More importantly, a CPA's expertise expands outside of the area of taxes. A CPA should be consulted when you're deciding on your business structure, when you're ready to set up your accounting software. We can provide monthly and quarterly financial statements. We can also provide the compiled financial statements that a lender will need, as well as sign off. We can assist with your cash flow management, assist with your investment strategies, and provide business and trust advisory services as well. I would strongly suggest that you don't wait until you need a CPA to do a search for a CPA and hire them. Generally speaking, when you need a service done correctly and quickly, you're going to pay a much higher fee for it. You should go ahead and reach out and establish a relationship with a CPA before you need them. Now, many people consider hiring a CPA as a luxury for their business. But the truth is, we're actually a necessity when it comes to running and growing a successful business. I wanted to share one last item before I close out. Now, this is not a smart money move, but this is just a bonus. During this time, you want to make sure that your business stays flexible and you're able to pivot. Now, you may have started your business believing it was going to be ran a certain way. And now that things are changing, you should focus your attention more on the needs of your customers and clients. If the market is demanding products or services that you have access to, but you're not necessarily in your business plan, you should really consider how you can adjust your business to fill in the need of the market. I hope that the tips that I provided to you today help you make smart money moves and pandemic-proof your business. Please follow me on my social media where I provide helpful tips on accounting, taxes, and business advice. Thank you and have a great day.